Welcome back. You're tuned into Bazaar Morning Call. You're on CNBC TV 18. Hope you're having a good morning. Well, there are plenty of stocks to discuss. Prakash Diwan joins us to do exactly that. Hi, Prakash. Good morning. Well, quite a few of these banking names have been in focus, and we have some positive news flow on IDBI Bank overnight. What's your view on this stock? From year on, yesterday, all the banking names had a bit of an off day, but let's see whether or not they bounce back. Your take on IDBI Bank in particular?
Good morning, Nigel. So, you're right. Banking has been taking a little bit of a backseat in this softness that we witnessed. But particularly for this bank, I think the reset in the capital structure and, the regulatory overhang in terms of the government's ability to now offload as quickly as possible to third-party investors is going to be far more superior. I think it's kind of setting the tone for some sort of a transaction which hopefully gets triggered before March, because that's what would make meaningful sense for the other large shareholder, that's LIC. So it's definitely something that's taking shape. But there's no fundamental trigger to back any change in valuation in that sense. It's fairly well known and discovered that IDBI Bank would be on its way out in that sense. But what's interesting about the entire banking pack, Nigel, is that we've started seeing a lot of the smaller banks also strengthen themselves, while the bigger banks have always been, the top three. If you look at SBI, BOB, Can Bank, have gone beyond doubt into a trajectory of growth which is fairly impressive. But now it's the mid-sized banks, the smaller banks that are coming in. So the last time I recommended that it's best to play the PSU pack through a ETF, if you will, because you really don't know which one will be actually taking off before the others. So it's best to kind of have a more diversified bet. But there's definitely one more round of re-rating that's very evident in the PSU banks, and you should miss out on that.
Okay. Prakash, up your alley, tire stocks. There is some interview with Anand Goenka in, I think, the Mint. And the talk is that the company has a target to reach $2 billion revenue in the near term. Sonia did some analysis and says that it's perhaps 2 years away. Maybe 25. But your thoughts, are tire stocks worth buying, raw material prices cheaper, and what would your pick of the pack be?
So, good morning, Lata. So, I think, the factors that are helping tire companies get back to their regular or long-term averages in terms of margins are very evident, whether it's rubber prices, whether it's crude. And there's a surplus capacity, or rather significantly huge capacities that have been created for some of the other, critical components or raw materials like carbon black and all. So all that put together does really make sense. If you look at CEAT, of course, they've done enough restructuring in terms of the balance sheet, also the debt repayment, and also we know about that. But it's kind of priced in, is my view. I would look at something like a TVS Sri Chakra. Again, that's a company that's focused on two-wheeler tires and has a very strong franchise. If there is a revival in the two-wheeler side, there's no reason why something like TVS Sri Chakra can't. Of course, it's a high-price stock. People really don't want to talk about it as often. But I think at this 3,500 zones, it's definitely something which would probably get very good upside from here on, given the secular trend and the company-specific market share gains that it's making all this while.
But CEAT also is high priced, isn't it? It's always been ruling at high PEs, isn't it?
Yes, it is. It's like the baby MRF of the tire stock of sorts. Yeah.
That Prakash, hi, morning. The shack look is very becoming of Goa.
I know, it's a telltale. Yeah, I can't hide it.
No, don't try to hide
you
it.
Mustn't,
Why should you hide it? Prakash, the one name which caused a lot of pain yesterday was Bajaj Finance, right? It's widely owned across portfolios. At one point, used to be the top holding across a range of. And by the way, I put out a piece 2 weeks back on Editors Roundtable looking at Bajaj Finance and how it's had one of the worst years in 2022. Actually, forget worst years. It's never had a down year. It's had, I think, one other down year. 2022 was one of them. And yesterday was down 7% after that operational update. Your sense from here?
Yeah, Prashant, you're right. So after 2018, I think this is the first year of disappointment in terms of their growth metric. But the company has been growing at such a rapid clip it gets difficult to sustain those kind of growth rates for too long. And the market is, in a position that, I mean, they're in a mood to punish things that really don't go their way. I mean, people are waiting for the slightest of excuse to trigger a sell-off, and Bajaj Finance with its premium valuation definitely, is ripe at times to do that. But there are some interesting changes in the company. If you look at both the Bajaj twins, between the two of them, you have at least the AMC business that's likely to start coming up. And there could be some sort of a shift from a fund-based activity to a fee-based focus within the group. And that is something which a lot of people really don't want to own, because you have lots of other much more mature listed players to kind of ride that with. So the asset management business is something which is going to be significantly large for them, given their customer base, given the cross-selling ability. But all of that is something which makes for a shift, so the recipe is changing. Is my view, and people just wanted an excuse to do that, and the update was probably just right. It may not be as bad for the coming quarter, which is the current quarter, but then the skittishness in the market is probably largely responsible for the timing of this sharp fall.
Okay, well, do stay on, Prakash. We have a few more questions for you. Maybe catch a cup of coffee.